The Nigerian Exchange Group has announced a robust set of earnings numbers for the full year 2024. The result reveals a steady growth in all the NGX revenue streams for the past year, capping the year with a historic dividend payment proposal of 4.4 billion naira. That's at 2 naira per share, which the shareholders of the Exchange Group is expected to approve at its upcoming annual meetings. Joining me now for a facts behind the earnings, Temi, the Group CEO of the Nigerian Exchange Group. Good evening to you, sir. Thank you for coming in on the show.
Thank you for having me.
Thank you. It's good to have you. We appreciate that. Let's just chat to the numbers very quickly. Time is money. Talk to me about the key drivers of the strong performance for last year. What are they?
Thank you. It's always good to be here.
Thank you.
I think there were a few things, really, when we look at the way we started last year. The first thing that we did, and by we, I think it's important to state that I'm supported by a very strong team of people, a very strong board, very supportive. One of the first things that we did was just to look internally at the start of the year. It was clear to us that we could find ways to drive productivity, that we could find ways to run the business a bit more efficiently, a bit cheaper. So we spent quite a bit of time on that, just restructuring the business and moving things around. And then as the year wore on, there were a few things that we benefited from. First and foremost, of course, our core business, our sales business, our trading business. A lot of the banks, as you'll be familiar with, came to the markets to raise capital. That brought, I would say, a sense of life, or a renewed sense of life, to the markets. But away from that, there were maybe three other things that I think are worth highlighting. One is, I think, if you look at what we've done around technology. The last time I was here, you would remember that tech was a big part of what we spoke about.
Exactly.
And it was quite good to see that work come through last year. For the first time through those primary market issuances, every single bank that raised money from public markets did that through our digital sort of solution. It was possible for the first time for you to do this primary issuance of the banks. You could use your bank mobile app as an example while you're transferring money. You could also buy their shares in that public offer. So that really helped us to drive flows. It also drove a lot of technology revenues from us. We're able to monetize some of that. So that was good. You would also remember that last year we made some investments into Ethiopia. That investment was strategic for us. We see that investment less as a capital appreciation type of investment, but one that just helps us to establish more thought leadership, one that helps us to diversify our routes across the continent. But in the end, also, we saw some gains from that. So overall, I think it was a year that was, across all our lines of business, and across operational efficiency measures, it all came through to the numbers that we saw.
I'm looking at some of the line items, and I'm beginning to look at in what areas of operations do you think most of the revenues came through the revenues stream that you delivered for last year? You mentioned technology and a few other. What areas do you see?
So our traditional business, trading business, was very strong. The listings business also was very strong, so a lot of the follow-on offerings from the banks, came through quite well. We have a very big treasury book, retained earnings over time. We're very efficient and very prudent with the use of those resources, so they also had double-digit growth. The technology income I spoke to earlier, now we have two streams of technology income, what we call our BAU tech, that we charge those who consume technology from us. But this time around, I think an increased new line of revenue as we develop digital solutions. So that also was helpful. And then away from that, data, of course, is another core part of what we do. Data was a big one. Now, the other bit is a lot of our associate companies as well. As a group, we have investments in other parts of the capital market ecosystem. We're a financial market infrastructure company. One of those companies, the CSCS also, I think, when we look at their contribution to our numbers, also was a record year of performance there. So pretty much if you look across all our lines of business, we saw very good, strong revenue growth, which I think points also in a wider, bigger picture to what looks like an upward recovery in the general economy.
I read through the earnings statement and of course, just trying to look back into what the chairman of the group, Dr. Umaru Kwaranga, talked about the post-demutualization growth that we're seeing at the NGX. The dividend, I'm sure the shareholders will be happy this time, 4.4 billion, 2 naira per share. And he said that this is positioning the group as a key driver in the market development, is to continue to invest in market infrastructure and all of that, delivering on your long-term vision. So talk to me about some of the strategic milestones that are expected to continue driving growth at the NGX moving forward?
Sure.
Some of which the chairman, of course, talked about.
Thank you very much. You know, it's funny, we've just come through out of a board meeting where we spent some time talking about strategy. I think the way we look at this year, it's a triple bottom line is the way I'd like to describe it. A year that's driven, one, by financial returns, a year that's driven by, increasingly look at our impact just socially, sort of in the environment and the community where we operate, and then thirdly, just around the environment. So it's a sort of triple bottom line we're looking to drive. And a lot of that will be driven by partnerships across all these three levels. So whether that's partnerships with some of our existing, corporates and clients, whether it's partnership with government, partnerships with DFIs, partnerships with the private sector all around, I think is one of the themes that you'll be seeing from us this year. So I think specifically, what are the key things that we are spending time on? We're spending money on our technology. Technology still remains at the heart of what we think drives transformation in the capital markets. We're going to spend a lot of time working also with the regulator. One of the things that we find in our industry is that everything from financial inclusion, financial literacy, education about our markets, sort of that 2 clicks down as to what it needs for the leading indicator part of our industry, we also will spend quite a bit of time on that. So I think it's back to the basics. Also, I think we'll be helped by the improving macroeconomic, sort of picture. So that ultimately this drive for $1 trillion economy, we want to be a big part of that. I think we've made those ambitions very clear. And in the end, it still is a bit of a challenging environment to operate and to execute, but we expect to, be able to build on some of those gains.
Do you think some of the pressure from the 2023 macroeconomic reforms and all that are beginning to taper off for you at the exchange? Do you begin to see more interest in the market in terms of not just the bank sector recapitalization, but other aspects of the market are coming up on the back of the reforms that are happening within the broader economy?
I think so, absolutely. And there are many ways that one tries to test this. At the very baseline level, you could just try to see what sort of interest do we get now from investors. Investors requesting for meetings, investors requesting for support from us. And right now it's, maybe a meeting every other day with foreign investors as an example. And having been in this market for, I think, a few years now, you can see what that cycle tends to look like. So that's one of that. I think the reforms are coming through. You would obviously always think of the capital markets as a leading indicator for this sorts of situations. So we will feel the pinch first when, we're on the way down, and then on the way up, the markets are a good indicator for that. So we're seeing that the FX reforms, I think investors are getting more comfortable now, both local and foreign, around the FX situation, around some of the subsidies that have been removed, around some of the infrastructure, spend also that's been spoken about. And corporates generally also, it looks like confidence is rising. At the heart of everything that we do is confidence, consumer confidence, corporate confidence, investor confidence, and a lot of that is up. And in such an environment, people want to spend, people want to invest. I think the other bit is very important to state that we're in a sort of regulatory environment now that's very, in my mind, very keen for market development. Speaking about the SEC now, in fact, the central bank as well. So for us, operating in such an environment, it's very encouraging. You have regulators who also are eager for change, eager for market depth, eager for market liquidity, and we're very excited in such an environment to be able to, to execute.
What's your outlook on the annual general meeting? What do you think will be on the mind of the shareholders, of the investors the most when you meet them?
Well, so ultimately, at the heart of what we do, we work for shareholders. They're very, very key. Perhaps one could argue the most important of the stakeholders that we service. And the board, I think the chairman's comments that you spoke to earlier was quite clear. Shareholder interest is at the heart of what we do. So we feel quite confident. The numbers have been quite strong. The dividend declaration also has been quite good. And so we're looking forward to continued shareholder support, for what we do and at the annual meeting.
But part of the statement released with your earnings was you said about looking ahead, you're looking to broaden investment opportunities. Would that include outside Nigeria?
You tried to ask me about this the last time we met. For a group company that we are, absolutely everything is on the table. It's not just a geographic diversification, it's an asset class diversification as well. One of the things that we've said is we're trying to position our business, our institution, the exchange, really as a marketplace for capital formation, whatever kind of capital that is, whether that is private capital, whether that's public capital, whatever asset class that is, we increasingly want to be this financial sort of bouquet platform. And like I said earlier, you can't do that without the SEC, without the regulators, and we feel quite good with the view from them. So it really is all of that and more, I would say, all things being equal.
There are opportunities even within the country and elsewhere as well.
Precisely.
You like to look at those opportunities moving forward. Perhaps it's too early to ask what 2025 numbers will look like.
In February, in March.
My job is to ask questions. So what's your outlook?
Well, I will tell you that, looking at the kinds of stakeholders that I have, the board, shareholders you spoke to, it has to always be growth. That is what we're working towards. We are expecting that it will be continued strong growth. Because frankly speaking, as good as these numbers are, one could argue that the base is a bit low. Just when we look at all that our nation and our capital market has had to go through. So I expect that this should be a time of growth for us. We expect to see improvement. This certainly is what is the mandate that we have.
All right. Thank you so much. Let's leave it there for tonight. We thank you for those insights analysis into your latest earnings. Thank you so much.
Always a pleasure.
Thank you and congratulations
for
those numbers. We look forward to the annual meetings. Thank you.